everybody. Welcome back to another weekly market review for F45 Trading. This week is January 25th to the 29th, 2021. Pretty crazy that we've pretty much just about already banked a whole month of this year. It's just me, or is time flying by insanely fast? Anyway, last week of the month, and then next week is obviously the first week of February, and with that brings NFP. But before we get into NFP, we obviously have the US dollar FOMC news coming out on the Wednesday, the 27th. You can see right there. Now, they're not anticipating a drop in interest rates, or excuse me, I should say a change in interest rates. If anything, the interest rates go lower. But just be careful, because they have known to surprise, and anything can and will happen with the U.S. Fed. So more than likely everything will be fine, but just like I say, heads up, it could swing the markets a bit. And the market is definitely waiting for something. Now, it's either waiting for the FOMC statement coming out, which I believe it is, or next week, as I said, on Friday, February 5th, we've got non-farm NFP, non-farm employment change numbers coming out, average hourly earnings, unemployment rates, etc., etc., etc. So couple of big ticket items here in the next 2 weeks. If you're going to trade this week, I would highly recommend you get it done ahead of the Wednesday FOMC statement. Now, keep in mind, Wednesday will be an extended range, so normally markets typically cap off the high or low around noon to 1 o'clock New York time, and we've got a 2 p.m. FOMC release, statement release, so it will extend that time period from when the high and the low of the day is made. So typically what you want to do is you definitely want to have your trades all in and said and done from pretty much now to up to before Wednesday starts, because it's going to be pretty unfavorable. Now, to be honest with you, and looking at the charts here, I don't see a whole lot happening before the FOMC statement. You can see we've sort of been consolidating. Price ran this old low back here. Excuse me, I'm getting ahead of myself. Price came in and made a low in here, shot higher, failed to get above this area in here, and then dropped lower and took out the this low here, obviously. So now we've got a new low, which I've actually forgot to mark on the charts. Let's put that on there, right there. So now we've got a new low down at just below 89, or excuse me, just above 89. The low is 89.15. So that's the new low. Price shot back up, consolidated in here for about 4 days, shot back up, one nice little candle, and just on this chart, now there's a lot of charts out there, obviously, with different providers that show different data where this high did not take out this high. So just keep that in mind. And then we shot back down, and now we're just sort of in the bulk of this trading range from, here to here. So price has been in this area and trading in this area for quite some time. And I would expect until Wednesday, we're probably going to stay in this range and some variation of it. Now, we could certainly shoot down, below this low here, maybe even below this low here into Wednesday, and then maybe Wednesday might vault us up. The opposite could happen. We could shoot higher into Wednesday, maybe take out this high a little more significantly, maybe even run up into this area here that I was looking for after this run took us up, or it could just sit sideways. So this is one of those weeks where, we just kind of got to sit and wait. There's really not much we can do until that economic news release comes out. The markets are waiting for it. So you can either go in and trade in a consolidation, which certainly can be done. You just take the high and the low, mark it on your chart on the daily, and make sure you're within that and go within the direction of the trend for that short-term period, and get in and out and call it a day, 20, 30 pips, 40 pips, and be done with it. Or you can go trade the cross pairs, which you may see extended ranges in some of those. You just kind of have to decide for yourself. Maybe some of the exotics or something like that might be a little bit more favorable, but pretty much anything tied with the US dollar is probably going to see some consolidation and chop this week, and maybe even into next. Which brings me to EurUsd. We had price obviously shoot just a little bit under this low here. Now again, just depending on what your brokerage firm is, this low may or may not have been taken out. Mine has, obviously. We saw price has been rallying quite steadily since. So, you know, again, it's hard to say. I mean, are we going to come back down in here and play around in this range here, and then possibly Wednesday may vault us back higher? Are we going to do the opposite? Are we going to come up into here and then shoot back lower from there? I mean, it's 6 of one, half a dozen of the other. Now, I like the trend continuing to the upside in here, and I'd also like to see dollar drop down into this area here, especially this 89.80 level. I really like that level. What I'd like to see is Monday, Tuesday drop down into here, and then Wednesday springboard it up and take out these highs up in there. That'd be great. So if that would be the case, then we'd see EurUsd shoot above these highs in here, get back up into this consolidation range, fail to take out this low, and then come drive back down a little bit more definitively and maybe retag back off of this high in here. So that's kind of what I'm looking for, but again, it's FOMC. Anything can happen, and you should be prepared for that. GbpUsd, nice run up on GBP. You know, I shouldn't say nice. It's actually a pretty ugly run up, but it has been a very nice, long, extended run higher. You can see over 1,000 pips since the September 24th on these lows in here. So very nice. I mean, you could have went long anywhere in here and just set it and forget it. I mean, really. This thing has just been a beast. Now, just be very careful. I've got this line here highlighted. I'm going to go to a monthly area. You see this consolidation where we've had a month low here, a month low there, and a month low there. Now, not including the wicks. If you go out in time and you look at that at 137.60, a lot of interaction at that level. A lot of areas, that's an area where price really stopped in this track several times until it finally broke free. And we haven't revisited that area until now. And even the high of this candle at 137.45 still hasn't quite got there yet. So what I'm saying is, if and when it happens, and when it happens this week, I don't think it's an if, it's a when it happens this week, price hits this 137.60 level, don't be surprised if we see a pretty major bounce happen. You know, do we come back down and maybe hit back into the highs of this consolidation level in here and then rally higher from there? You know, do we go even deeper? I don't know, but I just think that there could be a noticeable reaction at this 137.60 level when it gets in there. We're not too far away from it now. We're only about 50 pips, 55 pips away from it now, so just be careful on this one here. What I'd personally like to see is price just drive right through it, but I honestly believe we're probably going to see some bouncing happen, and we could see a couple of down days, if not weeks, lower prices on. Now keep in mind, I'm on the monthly. You go down to the weekly, and you can see prices just really slowly struggling to make it up there. We're just about there now, and don't be surprised if we had a big sell-off on EurUsd, on GbpUsd. And I've noted in here, all of these lows, low, that haven't been swept or haven't been ran out, they are, I think, doing that for a reason, to get everybody trapped up in here and keep jamming their stop up, and they're going to shoot this thing down at an unprecedentedly fast rate. So just be very careful. I do think longer term we're going to see higher prices on GbpUsd, but we'll see what this week gives us. And you can see here, this is the daily, as I say, we're just creeping on that up into there now. So I would imagine we'll probably tag into this here very soon. If not, you know, before Wednesday, maybe tomorrow. Australian dollar, we have a holiday in Australia on Monday, so we'll probably have pretty muted price action in here. As you can see, the last 4 days really haven't gone anywhere. Not much to talk about Aussie, so we'll wait until next week to go through Aussie after FOMC. And the same thing with USCAD. Price has really been sideways here for the past couple of weeks, and there's really not a lot to talk about here. So I think after FOMC gives us what it's going to give us, we'll have a little bit more definitive direction in price on Canadian dollar. So that's going to wrap it up for Forex. Now going into crude oil, we had a bit of a sell-off last week. We saw price shoot up into here, and I was really looking for them to come up and run these highs again and get up into this mid-55 level that I have marked up in here. We still haven't done that yet, but you can see we're just sort of going sideways right now. Not making any new highs, other than last Friday where it just dipped below this low here on the 11th of January. We really haven't gone anywhere. Now, do we make another low down in here and come back and retest this consolidation range and do something like this, and then possibly make that run higher? I'm waiting to see if that's what it wants to do. If price can't get through, and this is important, if price can't get through the 5270, 5270s level to 52, call it 53 even. If we can't get above there on the daily, and price is trading up in here and sees a lot of resistance, and then you start to see price rolling over, I think then we'll get a note or get kind of the tip off that we're going to probably trade down to the low 50s, high 40s. So watch out for that. But we did run this low here, and so far price is opening very, very soft. So we'll see what this week gives us. But just watch this area. If we shoot up into this area, and it really doesn't look like it's going anywhere, and it starts to roll over, we're going to make another low. So just watch for that. What I'd like to see, though, is this candle here from last Friday have been the stop sweep that we're looking for, and price starts to surge higher, and we make some new highs next week. That's what I'd like to see. A lot of stuff's happening on the crude oil front, so you can go out and do your own research on that. I'm not going to get into it right now, but leave some comments below if you'd like a little more explanation on the crude oil markets and some of the geopolitical stuff that's affecting it. I can certainly get into it, but I'm not going to today. I'll leave those. If you want to see them, like I said, leave it in the comments, and I can certainly more than happy to comment on that next week. Gold. Now this is kind of why I think the US dollar may potentially run higher one more time. We're not making those significant highs on gold and silver yet. We had a big sell-off, consolidation, and a big dip down, and I was actually watching the 1790 level, and I was a little disappointed that this candle right here didn't get down into it. It kind of left me sort of wondering, I wonder if they could come back down again one more time. Don't know if they'll get underneath this low here, but we need to move this down, and we'll make that the new low. Right there. So just watch that level there, okay? I don't know if price will get back down to it again, especially if the US dollar, so this is, and again, this is one of those levels or areas that's important. If we see price for US dollar start to shoot much, much higher, then watch gold, because that will, I think, shoot down to the 1790 level. Now, what I don't want to see is them take out this low here. If it does, it means gold is not going to rally anytime soon, and we're in for another major sweep lower. What I'd like to see, though, is if price can stay above this consolidation area without closing down into it, that would be bullish still on gold, in my opinion. We could see some downside activity if US dollar does go higher, but ultimately I'd like to see them stay above this. If we go below it, watch the 1790 level. Don't take your eyes off of that. Now, if price goes up into here this week, Monday, Tuesday, or Wednesday, and we start to stagnate out at this 1870 level, watch that, because this area right in here is pretty critical. If we can't get through that, that's going to send things lower. And then, like I say, I'll be eyeballing this 1790 level. So just watch out for gold. We may not be done to the downside yet. But again, ultimately, and I keep saying this, but if you look where we are, and look how long prices really stayed in this range for it. We stayed in this range, not so much in there, but in here, all through here, all through here, all through here, and now we're in it again. So price is really, really working this level. Some big things in this market are going to happen, and I think they're going to happen very soon. But what I'd like to see, if we can get down to the 1790 level and not breach this low, I think that, in my opinion, would be a lock to go long. And I'd be getting all over longs and getting above these levels here, and possibly getting above here. But right now we're just in an extended consolidation. It's not going anywhere. It's been here for 1, 2, 3, 4 months now. 5, 6 months technically, if you look at this big run up in here. So just hold off for now, and we'll see what we do this week here. Okay. And the same thing with silver, obviously. We're just kind of sitting in this consolidation range. Silver looks a little bit more bullish, as I've felt it always has looked more bullish. I want to see if we're going to sweep below these lows here and tag back into this level here. This is the area that I'm really looking at. So I'm watching that for on silver. And obviously, it'll be following whatever gold does. Bitcoin. Just really quickly, just want to talk about this because this market has seen such an unprecedented whipsaw sell-off. We ran up to above 40,000, tagged off the 41,000 mark, and then sold off sharply. And if you look at that, I mean, from this lower move up to that higher move, I mean, we've given back over 50% of that move. Pretty impressive. Now we're kind of sitting right about that 30% give back level, so lots of volatility on these coins here. So just be careful. And again, watch this level right in here. If we can't get above this level, it could be in for another round of a sell-off. There's a bit of a gap down here about the mid-20s that it could want to extend back down into. So just heads up to any crypto holders out there. We could see it one more leg lower on crypto, so just watch out for that. Okay, that's all I've got for you guys. I hope you guys have a great week of trading. Again, remember FOMC Wednesday, so if you are going to trade, get in, get out, be done Monday, Tuesday. Don't hold in through Wednesday because I think it's going to get a little volatile. Could be a little whipsaw happening, and hopefully we'll make it out on the other side because next week is another week, and things are just starting to get heated up for the year, so don't blow your wad at all in one trade this week. Trying to get in there and screw around and hit a home run. Just, if you can, in and out, precision strikes, 1, 2, 3, and you're done, and call it a week, okay? There's plenty of other markets to trade that aren't Forex related, plenty of other markets to trade that aren't commodity related, lots of stock market and equity options out there. So, you know, maybe if, like I say, if FOMC and all that is too much for you guys, maybe look to some other markets just for the next week or two until things kind of settle down a little bit. So that's all I've got to say. I appreciate your time. Remember, please leave a comment, like the video, hit subscribe if you haven't already, and please share this out to your network. I would really appreciate that. Thanks for watching, folks. We'll catch you next week.